Welcome to this episode, guys. This episode we're covering what a breaker block is, the psychology behind them, candlestick patterns that forms breaker blocks, how to identify quality breakers to execute winning trades. So if this is something of interest to you, stay with me after the real disclaimer and intro.
Guys, today we'll be thinking of breaker blocks. So let's get going. So when we say breaker blocks, what does it simply mean? A breaker block is a previously filled block that becomes a key supply or demand level on a price chart. So let me make an illustration to demonstrate what a breaker block is. Let's say the price is moving in an uptrend, higher high, higher lows, higher high, then price immediately breaks through it like this. So this is a higher low, higher high, higher low, higher high, higher low, higher high. So this zone was supposed to create a new higher high. It was supposed to do something like this. When price came down here, touch it like this, then create a new higher high to break this structure. But it failed. It failed, so it becomes a breaker block. This zone becomes a breaker block. So anytime price comes back to this zone, price comes back, rallies up to the zone, it's supposed to sell from that zone. That's the concept behind breaker blocks, just like this. So one thing to notice, every time price breaks through a key level without expecting it, that area changes its character. So this was an order block, which we support and resistance traders will say a support level. So we're supposed to support price, then push price up, but it failed. So once price breaks through it, it becomes a resistance level. Like it becomes an inverse of the opposite, or the opposite of the previous character. So this was a support level, but it failed to support the price and push it up. So it becomes a resistance level here. So let me illustrate a bearish scenario. So let's say price is going down, creating lower lows and lower highs, just like this, and price breakthrough. So like this zone becomes a breaker block because it failed to push price to break the structure to become a new lower low. So anytime price reverses and comes to this zone, it's supposed to respect it. Yeah, supposed to respect it and push upwards. That's the concept for the bearish scenario. Push upwards because the price has changed direction. Like I said, this was a resistance level to the support and resistance traders. It was a resistance level which was supposed to push price down, but failed, and price broke through. So it becomes a support level to push price up, rather, since it failed to push price down. So that's the concept of breaker blocks. So breaker blocks are caused by many factors, like market structure shift. When price is being overvalued, let's say price has dropped so much, so it has devalued its value. Let's say let's say inflation has caused the value of the price to devalue. So let's say dollar being 14 cedis now as compared to the cedis, the cedi is over devalued. Yeah, so you have to bring more of the cedis to collect dollar. So the value of the cedi is now less. So yeah, and breaker blocks are caused by when price tap into a higher time frame key level. So let's say you trade on a 4-hour time frame, but price has tapped into a monthly resistance level. So that resistance level on the monthly time frame will push price to create a breaker block because it will respect that resistance or support level, because higher time frame key levels are the best and they mostly respect. So and economic news or fundamental news can also create breaker block. Let's say price is pushing up, then all of a sudden the dollar becomes weak and price suddenly starts selling. So it will create the momentum. Price will take pass through the other block that was supposed to push price up, will create a breaker block. So that are some of the reasons or ways how breaker blocks are created. So let's talk about the psychology behind breaker blocks. So the psychology is the market was creating higher highs and higher lows. Let me indicate it. This is a higher high. This is a higher low. So I'll just copy it. So this is a higher low. This is a higher low. Okay. This is a higher high. This is a higher high. So once price is break through this level, it changes. This becomes a higher low, a lower low. This level becomes becomes a lower low. Sorry, I have this keyboard function that keeps changing. So a lower low. So we copy this, I'll use it here. So this level becomes higher low, a lower high rather. Okay. So price was constantly moving higher high, higher lows, higher high, higher lows, until it broke structure. It changed direction into lower lows and lower highs here. Same scenario applies to the bearish market. So this is a these are lower lows. These are lower lows. These are lower highs. So price changed scenario here. Once the resistance level failed to hold, broke through and became a support level. Sorry. So this becomes a higher low. Sorry. So becomes higher low. So this is the psychology behind breaker blocks. It changes the direction of the market from higher highs into higher lows, higher highs, lower lows, higher highs, lower lows. Yeah. So the market was going higher, low, higher high, higher lows. Anytime market breaks through like this, it's called break of structure here. So this area market failed to break structure, so it changes scenario into lower lows and lower highs. It's like this break of structure here, break of structure here. So this area failed, which created a new scenario that is higher highs, higher lows. So breaker blocks are mostly effective when price is moving bullish or bearish without pullbacks, and it doesn't respect premium or discounts or supply level areas in its path. So it keeps going boom, boom, boom. Yeah, so the momentum price carries to break through an order block. An order block, a failed order block is what becomes a breaker block. So let's say the momentum price takes break through the order blocks will determine the possibility of that breaker holding. So let's go to the next topic. That's the candlestick breaker block pattern. So price, let's say price. Let me take this one. Price is going like this, like this. Lows, high, higher lows, higher high. Then breaks through. So this one cleared liquidity. This area is liquidity. So once it cleared liquidity and this breaker, this area doesn't hold, becomes a breaker block. Yeah, because it has cleared liquidity here. It shouldn't be like this. It shouldn't be like this, going up like this, like this, like this, like this, then goes down. Nah, it shouldn't be like this because this one didn't clear this liquidity, but rather this is a valid one. Even if it's a wick that cleared the liquidity, it is considered valid. But once it doesn't clear it and close below it, then it goes down. It's not considered as an order block. Yeah. So that's one. And in a bearish scenario, the price sharp movement must create a higher high and must higher high and must form lower low in bearish scenario. Yeah, just like I was saying, it was creating higher high, higher lows, but it changed into lower low and lower highs. Yeah. So once buy side liquidity has been taken out, the price must start to reverse in the momentum. Just like I was saying, buy side liquidity here has been taken here. So the momentum price takes breakthrough, makes this area a valid breaker block. But something like this, price didn't break through, or just it failed to create a higher high, but didn't clear liquidity. So it's not considered a valid breaker block. So this must not be treated as an order block. Sorry, a breaker block. So the breaker blocks are considered only one-time use. This means we focus on the trading opportunity when the price just first enters the breaker block. Once the breaker block has been mitigated, we do not consider that area of interest for future trading. Yeah, so like I was saying here, once the market come back to this zone and respected then goes down, this area or that breaker block has been mitigated. Like it has been filled, the gap has been filled. So anytime price comes back up here, we don't trade it as a breaker block. Although it could respect the market as a resistance level, then bounce back. But we don't trade it as an order breaker block because it has already been mitigated by the first touch. So how to identify higher quality breaker blocks for to execute winning trades? Yeah, so something like this. Let me draw my chart here. So first one is the liquidity sweep. Liquidity sweep, then a breaker forming. Like this. This is then a breaker forming. And second one is a breaker block between a liquidity void. Yeah, a liquidity void is the momentum price takes to break the other block that becomes the breaker block. So it leaves a large gap which price will fill it and tap into the breaker block. Then if you respect it, then goes down. And then we have a breaker block that will in line with an order block. Yeah, we treat that one as well. Then sometimes the breaker block will be in line with with a fair value gap. That market will fill the fair value gap, tap into the breaker, then start dropping or start pushing up. So without wasting much time, let's go to the chart for some real chart examples. So let's take some example here. Just like this area. let me remove this here. This area here failed to push price up once it was coming down. It fails to push price up here. So it's this area that broke structure here. Clear this liquidity. Then after clearing liquidity, it came down. This area was supposed to hold, but it failed. So it becomes a breaker block. Let me remove these drawings. So this area becomes an area of interest. That is a breaker block. Just like this. So this area. So this area, this is a breaker block. This is a breaker block. So we don't just jump into trades once the market comes to the breaker. You look for price action. So right here, the price started losing momentum. That's the buyers started leaving the market because they've been trapped. They considered buying from here upwards because they saw a support level where the market broke through. So they are trapped. So once the market comes back to their break even, they close their orders, making more sell orders comes into place because the buyers are leaving the market. The sellers gain more momentum to push price down. So once we look for confirmation, the first confirmation was this, a bearish engulfing candle. So you just mark your engulfing candle out. Then you mark this here, this first one. Then you scale down to the 15 minutes. That's my lovely time frame for entries. So let's go to the 15-minute time frame. Let's check the time. That's 24th December. So let's go to 15 minutes time frame for entries. So all right, sure. So here is it. So after price respected the breaker block and the buyers started, the buyers left the market, leaving the sell orders to trigger. So once you scale down, you will see another level of interest here. So in order not to miss the trades, we just put our orders here. We mark from the top to the down here. So the momentum price was taken to go to break the momentum price to break through the order block, creating the breaker block will determine how you trade it. So with this, there's a fair value gap here, but the momentum price was going down. There's no way the market will be able to fill this gap, but rather we test the zone, then start selling off. So in order not to make the trade, you use the wick as your entry, and your SL will be here. You can put it here if you don't fear of being stopped. About to be on the safer side, you put at the previous lower high to be safe, in order not to be spooked out of the market before the correct direction. So just like this, you go to the 2-hour time frame, look for your TP level. Look for your TP level. This liquidity here will be your TP level. So this zone right here, and it was a winning trade. Just some few candles drop, the minimum pull back, then 5.3 RR was made, and this is a good trade. So from this area, let's see, 2684 was the entry, then target was 2659. That's a very nice move. If you are to enter this trade with, let's say, 0.05 dollar, you're making a lot of money. Even with 0.05, 0.01, you will make at least some cool monies that will be ranging from $50 upwards. So this is the first example. We can, let's see for another example. Another example. Like I was saying, look at this zone. Look at this zone. Like I was saying in the study room, in the study section. So market was really going down. This created a lower low, created a higher high. So market came down, couldn't sweep this liquidity before going up. So it's not traded as an order block, sorry, as a breaker block, because it couldn't sweep liquidity here. So we don't consider that area as a breaker block. We don't consider this area as a breaker block because market failed to come down, sweep this liquidity before going up. So, like I was saying, this area, like I was saying, it must sweep liquidity before going down. Something like this area is not considered as an order block. This is the example I showed you just right now, because this area was to be a breaker block, but price failed to clear this liquidity here before breaking through, so it's not considered as a breaker block. So let's set for another example. So let's go to BTC for example. Sorry, my network's really messing up. So which area are we trading? That we keep our sales from. So, yeah. Sorry guys, sorry for the delay. Just looking for example where we could trade from. So this is the example I showed. This area, if your price failed to clear this liquidity, so it's not considered as a breaker block, this area, because if you do started to trade from this area, you'll be smoked out. You'll be like, oh, how did I fail? This is a breaker block. No, it is not. So let's pick an example from this area. Let's pick an example. No clear example. I want us to look at for an example, at least one example to add up to the one we found on gold. So we will close with this chapter of breaker blocks. If you want to clear liquidity, we don't trade as a breaker block. Let's check GBP USD. Let's see any clear moves. Right, sure. This is a clear example. So if you check here, market was going up, low, up, low, up. It cleared this liquidity, then came down. This momentum, this area failed to hold. Yeah, So with the momentum, price took to break this area. Price will not come back to fill this liquidity void. It will fill, let's say, 50% of the liquidity void, then tap the wick of the breakup level, just like this. So in this area, price respected the tip, filled up to 50% of the liquidity void, then started dropping down. But like I said, we don't just jump into trades just because we spotted the breakup level. No, we just wait for a clear entry. Let's say this candle didn't engulf this, but this candle add together with this candle with less pullback here. So when these candles, two candles merge like this, it creates the engulfing candle. So you will use this candle's closure with this, with the tip of the candle it's engulfed here as our entry. So let me make it so it doesn't miss me. So we're going to make this capital. So let this out. This is a level for me. I use it to trade. So this was, let me check the time, 24th December, 9 o'clock. So let's go to the 15 minutes time frame for entries. So let's jump 24th December, 9 o'clock. Take me to 9 o'clock. So here. Wow. So was it really 24? Yeah, sure. So once you scale down to the 15 minutes time frame, you look for your entries. So these three consecutive candles created a fair value gap. That's here to here. The price couldn't fill it. It just came up to this area, then started dropping. So we don't just fall. We don't force trades. So we just wait. As price broke through below it, this area, it's rallied up here. So expected this level and it's going down. So you don't rush trades. Right after here, so your clear fair value gap. Mistake. So because the momentum price was rallying up, you see market there wasn't a lot of liquidity in the market because it was 10 o'clock in the evening. Then the market wasn't really volatile because market is mostly volatile in the London and the New York section. So with this you can put your sell limits at the tip of the fair value gap. Then your SL, you can put your SL here. The high first candle that created the fair value gap. But to be safe, I just put my SL here. 5 pips above the high. That's here. 5 pips above the high. To be safe. So this area, this liquidity zone can be your first TP. First TP is here on a 15 minutes time frame. With this level 4 I was picking, but mostly you will also go to your 2-hour time frame, search for the next support level to place your take profits. So this is November. Okay, here. Sorry, this is the trade it took. So this is a gap here, liquidity here, gap here. So definitely price will go and fill this gap. Take this liquidity and fill this gap. So you can put your tip here, the tip of here to be on the safer side. Then see, easy trade because market was rallying up. Market moves towards liquidity, so this liquidity must be taken out. Must be taken out. Then this gap, sorry, this gap must be filled before any move can happen. So this liquidity taken out, this gap is filled. So you put your TP here to be on the safer side. Then just like that, 9 hours made in a single trade. So let's check there. Pips. So entry was 84, CP was 18. So this, so it was like 66 pips. Yeah, 66 pips CP. 66 pips. That's off move for just a single. So I'm just nearest 4 hours for 66 pips because the market wasn't that volatile because it was in the evening. If it was to be the London or New York session, we would have closed the market with one candle just like this. One candle drop just like this. The market wasn't that volatile because people were sleeping, so the market was moving slowly like a tortoise. So this brings us to the end of today's lesson. So let's go for a quick recap, then we'll end this episode and continue with the next one. So let's go here for a quick recap. So I was saying breaker blocks is a previous failed block on the price chart that becomes a key or supply level, and once a breaker block is formed, the previous characteristics of the block changes. Thus, a demand becomes a supply zone and a supply becomes a demand zone. Then breaker blocks are created for various or the market might ignore the supply or demand of an order block for various reasons, but a failed order block creates a breaker block. That is one, market structure shift, the currency being overvalued, tapping into a higher time frame key level, then fundamentals or economic news can create breaker blocks. So the psychology behind them, the breaker blocks changes the direction of the market. That's a higher high breaks to become a higher low, then causes market structure shifts, then breaker block. That's the demand turns into a supply. Then a lower low breaks a lower high, cause a market structure shift that becomes a breaker block. Then supply turns into demand. Yeah. So then how we trade it? Like I was saying, just like this, higher high, higher lows, higher high. It clears liquidity, then creates the breaker block. If it doesn't clear liquidity here, it's not considered as a breaker block because there's liquidity still resting above this area. That needs to be cleared. So it doesn't clear liquidity here, so it's not considered as a breaker block. Then how to identify quality breakers for the quick trade? The liquidity sweep, then breaker block. That's here. Liquidity sweep here, and breaker block was created. Liquidity sweep and breaker block was created here. So, and a breaker block in line with a liquidity void, like I was saying, the momentum price take to break an order block will leave a large volume of one side resting in the market needed to be filled. Let's say the market breaks through a bullish order block, so it will leave a large sum of a large gap that is called the liquidity void. That market needs to be filled. That is, market will be rallying up to fill that buy side to make the market complete, because one side market involves buying and selling, buying and selling. So one side can rule the market. So the market always try to correct the positive moves. So the liquidity void is filled 50%, taps into a breaker, then that breaker is respected. So a breaker block in line with an order block. Yeah, that one is also a high breaker block to trade from. So with this, that brings us to the end of this video. Thanks for watching this video. I hope you found it informative and useful. Don't forget to hit the subscribe button and turn on notifications to stay updated on our latest videos. We value your feedbacks and suggestions, so please leave your comments below and let us know what topics you would like us to cover in our future videos. We appreciate your support and look forward to seeing you in our next episode. Thank you guys.